We do have an election coming up, so we'll see what happens with that. But like I say, get your house. Don't wait on that rate, or don't wait for the rates, because the house will go back up. So, hey, what's up, everyone? Real Estate Braddock here. Today's guest, had him before, having him again. Market's changing. And who do I have?
Tyler Croft with Croft & Co. Lending. How you guys doing?
There you go, man. So I brought my lender because times are changing. Things are starting to move. So how is the market looking, right now, man?
Yeah, I mean, it's crazy. It's volatile. It's high rates still. They're not going away. Inflation is persistent. Things aren't really changing. And that's, good, bad. It's kind of up to whoever's perception of it, right? If you're a buyer, it seems bad because it's difficult. It's unaffordable, things like that. But man, it's just we're flattening the curve, which to me is not a bad thing. It's kind of like, hey, we're getting used to this. People are starting to see these higher prices, the higher rates. We know the tools that we need to do. We're putting the education out there on buy downs, temporary rate buy downs, price drops on homes, or what I like to do rather is give them what they're asking and ask them for the concessions. Right?
Yeah, that definitely benefits them. Sometimes a lot more.
Yeah. You can get a lot better payment, a lot better rate, sometimes better terms. They could pay, your insurance for you, your HOA bills for a year. There's so many different ways you can do it.
Yeah.
But the way the market's changing right now is it's not really changing.
Yeah.
And so we're all on our heels and toes like we have been for the last 5 years, just waiting for something to happen, right? And I don't know. I mean, I think we're just getting comfortable, and that's not a bad thing. But I do think something will break eventually. Right?
Yeah. Well, my thing is, this isn't like before where, normally, typically, rates will go up and prices of homes will go down.
Yeah.
But it hasn't been happening. And to me, the people that are sitting on the sideline, I feel bad for them, because they don't know what we know, right? That this is not going to happen. So get your house now, because you can refi that interest rate later.
Exactly.
Don't think these houses are just going to freaking magically, drop 100, 200 grand. It ain't going to happen. If these rates already have been going up this long and prices haven't really budged, that should give you a little clue to, man, I got to get in there now, because what happens when the rates fall to 5, 4.5?
Yeah, I mean, if they do fall that far, personally, I think they will go down. I think we're closer to fives. And that's where we're going to stay for a long period of time, unless, like I said, something really breaks in the economy. A mass amount of job losses. Like, we really need to stimulate the economy somehow. And even then, we'll see what happens. But if that does happen, home prices are going to go up. Things are going to get more expensive, and it's going to be difficult to find something that you want on the market, because people are going to hold on to those things.
Yeah.
They're not going to sell. It's like when your stock goes down in the market, right? You have, let's say you got 100 grand on one stock, and then all of a sudden it drops and it's only worth 20 grand. Do you want to sell then, or do you want to wait and, you
see if you can recoup it?
Yeah, you truly believe in that company or that, stock or that fund or whatever you have your money in. Do you want to believe that's going to go back up? That's going to gain traction again, like the market, it does 99% of the time. It fluctuates, goes down, comes back up, right? Yeah. Do you have the time and patience to wait for it to come back up?
Yeah.
Real estate and stocks are very much,
they're similar.
And
similarities.
Yeah. And the difference is a lot of stocks actually have real estate in them. So
exactly.
But, the difference is, are you somebody who wants something that's tangible, that's an asset that you can feel, touch, talk about, go look at, or are you somebody that's like, hey, like, I like this company, I can read all their profit and loss, I like their, you've done all the research into that thing and you put your money into that. I think real estate is just such an easier concept for the masses to obtain. And so it's just a good way to get your feet wet into investing.
Yeah.
If you want to have a financial advisor do it, they can do it all for you.
Right.
There's fees involved. Same thing with real estate, right? There's a fee to everything you do. Yeah. So just kind of picking and choosing where you want to be.
Yeah.
And I, like you, we're kind of biased. We like real estate.
I believe personally, I've said it 1,000 times on my podcast, that I believe real estate is the poor man's way to get rich, right? Like, because you get equity, right? And then you can use that equity to finance other things, maybe a business, maybe, you know, you need a new car or buy another property or what have you. But I always felt that that's like the way the poor man or the man that, you know, the middle, how do you call it? Like middle America.
Middle class?
Yeah, middle class that can get even higher because of real estate. And so I've always felt that way, that real estate is, and it's blessed me in tremendous ways.
Yeah.
And I'm not going to repeat how it's blessed me, but I think it's a great avenue to get that, like somewhat of that feeling of wealth and building on for your family and your kids. You know?
Yeah, I agree. And I think right now in the world, we truly are at a point where the middle class is going away.
Yeah, oh yeah.
You know, like it's really tough. Like to be in the middle class and affordable, you know, income for a 2-person household, you're in the $140,000 a year range or more. Yeah. And some people can't afford that. Some people aren't in that class, and they're below the middle class. So they're, you know, they're maybe not poverty levels, but with the costs of everything, it's very difficult to get to that, right? And
so it's definitely separating that wealthier and the ones that even at 100, 120 are now considered, you know, lower. There's no more middle, like you said. It's dissipating, man.
Yeah. It's kind of like the wage gap and all the things that happen throughout, you know, history, that the rich get richer and the poor get poorer, right? And real estate is a really simple concept that, you know, everybody can, I think, grasp, because you have to have a place to live. Yeah. It's very nostalgic for a lot of people. Like, oh, I want to buy that house. I want to live here forever. I don't want to pay rent. I want it to give me something back. So nobody wants to put into something forever for somebody else, right? A lot of people want to do it for themselves, which is great, and we encourage that in our industry.
You hope there was more, though, because there's people happy with just renting.
Exactly.
They feel that, you know, I'm renting. If something kind of breaks down, the landlord takes care of it. Yeah, but the difference of what that would have cost to what you could have made in equity. I mean, it to me just doesn't. But again, there's people that just rather rent.
I think if you are above the middle class and you are in a position to where you have a business, you're self-employed, you are, you know, making an exorbitant amount of money to where you don't have to really worry about those things, I think renting makes a ton of sense. Because you're out there, you don't have to take care of your home, you don't have to, you know, do the yard, you don't have to do the pool, whatever it is. You have somebody else taking care of that for you, and I think that makes sense. Yeah. Right. Also, on the flip side, you know, if I was in that position, I know a lot about it, I would want to buy. Right. Still, even with that amount of money, I'd still want to own my primary residence and multiple rental properties. But if, you know, you're somebody who's just like, hey, I'm paying rent and I'm barely scraping by, or I'm paying the rent is over 40% of my income every month. Like, those are situations where it's like, you should look at buying, because then that's your savings account. That is your nest egg for the future. I don't know the exact statistic, and we could always look it up later, but realistically, there's a huge proportion of the U.S. Population that their retirement is their assets. Yeah. And what's the biggest asset, and you know, they own? It's going to be their home. It's going to be their primary residence. And it just makes sense. Because
sometimes they didn't maybe invest enough into their 401ks or IRAs and stuff like that. And I just done another video on, I think a lot of people need to diversify. And it's been out there a lot about the UILs. The life insurance policies and stuff like that will help you like later down the road as well. It gives you a life insurance policy now, and then later down the road you can actually pull out because you're putting in. And so diversifying different things so that when it's time to retire, you just don't depend on an IRA. Or you just don't depend on your property. You can depend on 3 or 4 things that will make up a whole in your whole, right? The income you were making as a hard ass working person, now you can get it from all these 3 or 4 different things you invested in. And so that's what I honestly truly recommend. But again, people's mindset, they need to be educated on those things because they're scared. Well, why am I gonna put money here? When can I touch it? And they don't see they want it. A lot of people are like right now, right? Instant gratification. Yeah. And so you have to be patient on some of these things.
Yeah. And it really is the people, right? It's you guys out there that, you know, if you don't own anything currently, You maybe feel discouraged in this market. You feel like you can't obtain it. It's obtainable. You have to work for it, though. It's not easy. This is not something that's given to anybody. This is something you work towards, and real estate is long term. It's not a short term thing. A lot of people on here on, Instagram, Facebook, and all your social medias, TikToks, YouTubes, they're going to try to make it sound like you're going to get rich doing this super fast.
Yeah.
And I mean, you're going to get potentially rich if you do it, but it is slow moving, especially if you're starting from the bottom. Your first through 10 deals that you ever do or homes that you buy are going to take time. Yeah. And that's just that. You're not going to like, oh, you might get lucky.
Yeah, I was just gonna say that, like, hey, you might get lucky, like where you bought in 2019, and then your house went up 200-300 grand, and you just decided to sell, and you pocketed that money. That could have been one of those incidents. How do you say?
Incidents.
Yeah.
Instances.
Instances.
Yeah. But yeah, man. I mean, there are times people get lucky in the market, but they're not timing it. They're just doing it for them, and growing their stuff. And so it's obtainable. And I think that's what me and you and a lot of agents and lenders are out there doing, is just trying to tell people, like, it's still obtainable. Like, even in this crazy market, right? Sure. Where everybody thinks it's not there, I can't do it. It's never possible. It's never going to be possible for me. Yep. I'm going to wait till something breaks or crashes. Well, if you wait till then, you might be caught in the fire, right? Like, if you wait till everybody's getting laid off, you might be laid off.
Exactly.
Now you're not going to be able to do it, right?
Exactly.
Like, if you have that nest egg,
because there's a reason why, if something's going to crash or say houses are going to go down, there's something, there's an action that happened for that reaction. And that could be job loss. That could be, so many things, and you could be involved in that too. So your chances of buying a home again are shot.
Yeah. Yeah. I mean, obviously 2008 was one where it wasn't, people losing their jobs. It was mainly people, overspending because of the lending market back then. We were giving out loans like crazy, people were coming in saying, "Hey, I want to buy this $500,000 house," and the appraiser was told, "Hey, it's worth $600,000." The appraiser signed off on it because they were getting a check on the backside. It was a very bad situation for everybody involved. So there's a lot more to that. But yeah, I mean, it's obtainable. That's what I want everybody to kind of know and hear, and
it is
really
because
resonate.
You can go back years when the interest rates were 16, 17%, right? Mm-hmm. But the house, was only 50,000 or 100,000 or whatever. But at that point, you were thinking, man, that's a high rate, but it was still attainable. They still did it. Yeah. We still go like these valleys and peaks. We still go through these on interest rates and prices of homes, and people still manage to be able to get a home and or finance with the higher rates. Like I said, get the house now, because normally because I always tell people land doesn't grow anymore. So you get a house now, you can always refinance later. I don't know how many times to tell people that you can refinance later. The rates always go up and down. Homes typically don't. And now that they've kind of adjusted a little bit from the 2008 crash, I don't see that happening. That's just my humble opinion. I don't see homes going down in value a lot like they used to.
Yeah, and they're going to fluctuate up and down here and there depending on the area you're in, and you know more about all that. But realistically, it's like, they are going to fluctuate. Everything has its margin, right, that it works in. But typically that margin is always going up and not down for real estate, which is it's a good thing. Yeah. Something that has a finite supply or volume, you're not going to typically see that shrink or cost less. Like, you look at gold and stuff, it's not devaluing, it's not going down. There's still only a limited number of that. We don't use it a lot anymore. Right. But it's still a good, people are still putting their money in gold.
Yeah, investing into it. Yeah.
Why? Because it's a solid asset. Yeah. It's a finite amount of it. Yeah. Yeah, and I don't know. I think it's a good time to, think about, if you did buy in the last year, when you are going to refinance, starting to get your ducks in a row, making sure your paperwork is ready. Yes. Things.
Make sure you're paying your credit.
Yeah, like if you guys went out and bought, your house, and then right after you went and bought a $100,000 car, and you're like, wow, now I got a $1,500 a month payment. and you go to refinance, now you don't qualify.
Yep.
Right. So
plan ahead.
Yeah. Plan ahead. Check those things. Look at your boxes. If you have questions, call me, call your lender, call your real estate agent.
Yes.
Call somebody that knows a little bit about that credit and just ask the questions, and if you don't know, there's free credit reports online. You can get once a year. You print it off. You look at what's on there. There's mistakes. You can dispute them. There's so many proactive things you can do.
You just have to ask.
Sure. Yeah. And so like when you and a lot of agents are telling everybody, this, and I've even said it before, you can buy now, refinance later. Right. But in that aspect, you can buy now and then potentially, really mess yourself up if you don't prepare yourself. If you don't keep that mindset on track. So, I don't want to scare anybody from not doing it, but make sure you know the goal. If you're doing that and you're going that direction, do not put yourself in a position where you're not going to be financially able to refinance.
And don't be embarrassed to ask your lender these questions, man. Like, hey, if I did don't worry about it. He's going to just give you the honest opinion, but don't think he's writing it all down, all these things about you and be like, oh, okay, I got this information on him. He has a duty to, protect your information as well, but he's going to give you what he feels is the direction you should go in if you're asking him the right questions, but don't be embarrassed. Don't be shy.
And there's no wrong questions. Right?
No.
There's good questions.
Yeah.
Sometimes I have clients that surprise me with their questions like, man, I got to look that one up. Like, that was a good question. Like, I don't see that one very often. Or maybe
a unique scenario or something.
Yeah. Or like, hey, I do get asked that pretty often, but yours is, it's a little bit different. Let me just.
And everybody's case is different, right? Because I mean, it's a numbers. There's so many variables that you can't just say, oh yeah, you fit right in this category because you're the number over here, just different than the last one I did that was over here. You had everything else the same, but this number was different. So your situation is different. Everything's always going to be different.
Yeah, and I had a referral from a realtor partner of mine, and he sent me this guy, and he got pre-approved with a different lender. They went through the process, and he's looking at his Credit Karma score. He's looking at all the other scores on his credit cards and whatnot. And then when he goes to pull credit with this other lender, the score came in 100 points lower.
Oh.
Right? And so he's like, what the heck is going on? Why is it so low? And apparently the lender or loan officer gave him a pretty it's because of this or, whatever, but didn't really explain how credit works or why that is. And it's kind of like the Zillow thing with realtors, right? So you have this concept of, hey, I can look at my home value online. Where are you looking? What are you looking at? What data are they pulling?
Yeah.
Where is all of this information pooling into to give you that number, right? And same thing with credit scores. Where is all the information coming from? And then how are we analyzing that number? Are we basing it off of, how much credit card utilization you have?
Right.
Are we basing it off of how many loans you've had in the last 3 years? Is it being weighted? Is that score being weighted against, how many derogatory events you've had in the first or the last 3 years more than others? Or, there's ways that algorithms in those credit scores can really differentiate what number you're going to see.
Yeah.
And then for mortgage, if any of you, are interested in knowing, we look at the middle score of the three 99% of the time.
Right.
So if we pull all three bureaus and you have a 700, you have a 650 and a 620, we're going to use 650.
Right.
So it could be, you're seeing 700s on everything because all you're seeing is Equifax. And that's what they're showing, right? On all the credit card apps and whatever.
Yep.
And maybe that's pretty accurate, but you have two other credit bureaus that are saying something else is going on.
Yeah.
And we're not going to just say discount whatever they got, on their algorithms or whatever, because we pick those scores.
Yeah.
Or those lenders, I should say, pick those scores to use, to determine your
process.
risk.
For the lending process.
Yeah. So there's a lot to it. And all in all, you can't just, I love to explain that to my clients and be like, hey, this is what's going on. This is how it works. If you have questions, I'll answer those questions. But, I understand it's frustrating.
Yeah.
I can't discredit you for being frustrated. If I was in your shoes and I got that back and I'm thinking I'm in a 750 and it comes in at 650, I'd be the same way. Like, what the heck, man? But explain it to me, right? That's what I'd want. So
Yeah, as long as you can get it explained properly, have them understand, they should be good to go. Hey, but something is catching my eye. So
Yeah.
I'm seeing your social media and you're full full beard or a goatee and everything, and you're gone. It's gone, dude. You're like
gone,
me.
bro. It's
Sometimes
gone.
you just feel like having it. Sometimes you just shave it or the hair.
man.
So, you know what I'm saying? And you're like me, bro. Sometimes
I needed a fresh start, all right? I needed to, get rid of some of the scruff. I was feeling like a bum.
Yeah.
As a lender, we sit in our desks in our houses or whatever for 99% of the time. So I'm like, man, I got up, looked at myself. I'm like, dude, something's got to change. I need to clear up. Plus, it's coming summer. I bronze really easily. So I'm like, all right, let's make sure the whole face and I don't have this white ring around right now.
Hey, but sometimes you got to dress to impress, right? Like people do judge people they judge the book by the cover, right? And so, being clean and trimmed up and haircuts, they feel, okay, this guy's always on top of his stuff, Yeah. And so, no, I just had to bring it up, dude. Cause you're like me. Sometimes I'm like, I don't feel like this anymore. So I'll clean up or I'll shave this even more or whatever the case is. But I feel the same way, dude.
It's like all my buddies who have big beards, right? They're always like, oh man, like after a while, I just get tired of it. I'm like, shave it. They're like, hell no. Like I could never do that.
Because imagine to get back to that. That's what they're dreading, is to get back to that if they wanted to have it again.
Oh yeah.
But yeah, anyway.
That's like when I had long hair as a kid, man. I had hair down to here and chopped it all off and went real short.
Yeah.
Never had long hair again.
Yeah, never had long hair.
Like sometimes you do it and you're just like, yep, it's gone. I'm impatient. I don't have that,
Nice. Well, hey man, dude, any last tidbits for the viewer?
Yeah, I mean, there's a lot of things going on in the market, like I said, but overall, if you're looking to upgrade or obtain a house of your dreams in the future, kind of like I mentioned on the last one, still partnered with some good contractors, builders. If you love the house you're in, you got a great rate, you got equity, we can do home equities and can pull that out. We can help you renovate your property. You can also do, a tear down rebuild. There's so many opportunities.
So many.
Yeah. And then as I mentioned, I partner with Platinum Builders Group.
Yep.
Matt Randall. He's a great guy, builds good products. There's some homes in Buckeye with over an acre lots that are going to be going up here soon. They just started those. Those will be done probably in the next 8 months.
Okay.
Or less, hopefully.
Nice.
And then there's some up in North Peoria. Those are going to be some really nice homes. I think closer in the millions.
Yeah.
And they're right behind like CCV area on the last few acres. So
nice.
If any of you are in that margin, that bracket of income to where you are looking to do that, you're making great money online, e-commerce, or you own multiple businesses, whatever it may be. Maybe you're just a high level executive that can throw that kind of money around, right? Yeah, we got properties all over, man. Just
get with the right lender, you know what I'm saying? Get with the right lender that can figure all those things out and how to go about it. So
yeah, and you get incentives if you use me.
Nice.
He's giving out
incentives are always good.
Yeah, it's like the new build stuff, right?
Yeah.
There's a lot of new builders out there that are offering great incentives that I can't compete with. So I partner with builders, independent builders that
can do that.
Like to do the custom stuff, right?
Yeah.
Because they don't own mortgage companies like these other guys.
Right.
So I come in and help them out, make sure their clients are getting taken care of the way they want to get taken care of.
For sure.
That they know they're approved for those loans, and go from there, man.
Fantastic, brother. Well, hey, again, I appreciate you coming out, giving us a tidbit on what's going on with the market. And hopefully things, settle down. I mean, we do have an election coming up, so we'll see what happens with that. But like I say, get your house. Don't wait on that rate, or don't wait for the rates, because the house will go back up. So get your house. But anyways, I appreciate you coming out. You want to give them all your information, where to reach you?
Oh, yeah. So my website's still up, croftlending.com. Feel free to go there. It's got all my stuff. If you guys are interested in playing around with the calculators or looking at the rates and stuff, There's a few widgets in there and calculators and stuff as well. And then there's a list of the different products I do. So if you're an investor or whatever, it's all on my website. That's the best way. And if you want to give me a call, it's 623-451-2442.
Nice. And I'll put his information underneath him. I appreciate you guys tuning in again. Go buy a house, everyone. Real Estate Braddock out, and another great open house. Peace. Peace.